Hello, Forex Lens subscribers and members. This is John. I have not actually recorded a video yet on how to use the Ichimoku system because we do use that frequently in our trading. It's a very well-known trading system. It's very easy to learn and trade, and it's probably one of the best systems, in my opinion, that if you have not been profitable trading, then trade the Ichimoku system because it teaches you a whole bunch of technical analysis components that under one roof, and it will greatly help with your learning and your trading. All right, so let's just kind of go through how to set this up. Well, very easy. I just have a new chart here, nothing on it, and I just go to indicators, and if I just type in ICHI or Ichi, I look for here, Ichimoku Cloud. And then this goes on our screen here, all right? Now, the default settings are fine. There's nothing wrong with that. It's just that the colors or the length of the lines or the width bother me a little bit. So what I like to do is never change these. Don't ever change those. But I like to make the conversion base and lagging span lines, one or two thicker, and then the lead lines, we don't need those, but we do need the backgrounds plotted, and those are fine. All right. Now let's just kind of go through what the components are of the Ichimoku system. Well, the first one is probably what you notice right away about this is it's called the cloud. All right. And the cloud is made up of two lines, and we're going to see those actually. The ones that we kind of removed, they're called lead 1 or lead 2. Their actual names are Senko Span A and Senko Span B. Right? There's Japanese names for all of these, but we have since tried to just call them something different. But I think it's relevant to know what the original Japanese names are because this is a Japanese trading system. And if you ever wonder why these settings are the way they are, it's because the gentleman who created this prior to World War II. Now, this guy, he was a hard ass because he took all of this past charting data in Japan and on rice charts, and he had all of his interns basically go through every single past chart to analyze certain kinds of behaviors, and then after he had all of his interns do the work for him, he put it together, slapped a label on it, and it was the Ichimoku system. But oddly, this really didn't come to the States, or to the West rather, until really the 1990s, and it got pretty popular in the 2000s, and it's still around, and it's an indicator, but it's really a trading system. But it's so successful and a testament to its staying power is that it's everywhere, and we never want to change these values because these were the original values that were set because the Japanese market at the time traded on a 6-day trading week, not a 5-day like we've always had. It was a 6-day. Just a little trivia there. So the components again, we see the cloud that is called the Kumo, or just the cloud. And the cloud is fairly easy to look at and understand how it forms as soon as we identify what these other lines are. We see these two first kind of averages. So if I get rid of the cloud, get rid of all these other lines so we can isolate these. We have the conversion line, or the Tenkan Sen, or we have the baseline, which is the Kijin Sen. And these are not regular moving averages. These are averages of the average. So this line is not like a normal moving average. You can see that it flattens out sometimes because it's still an average period of time. So the baseline is done over over a 26 past candlesticks, but it takes the average of the candlesticks, not the close. Like most moving averages, they calculate the close and then put it. These are taking the averages of the candlesticks, so the mean or the mid of each candlestick. That's how these Ichimoku lines are formed. So that's the That's the conversion line and the baseline. But then the cloud, how the cloud is formed, and we'll get rid of the price here. The cloud is it just takes the conversion line and the baseline. It's displaced a little bit, so it's displaced like it's moved up or down. In this case, it's moved up a little bit. But it's just these lines are thrust forward in time 52 periods. So the Senko span, or just the leading lines, these are the bottom and the top of the cloud are just the past movement of the conversion in the baseline moved forward, and then they color the clouds in. So whenever the conversion line is greater than the baseline, the space between them is colored green. Whenever the conversion line is below the baseline, it's colored red. And because we really don't need the lines to see that, that's the only reason why I take them off. You can certainly keep them on there, but I don't feel like we need to see the lead lines when we've already got the cloud there. Okay? And then the last component is probably the most misunderstood component, and that is called the lagging span. And I think the lagging span is the most important component. Well, I don't know how you could. It is very important, and for whatever reason, there's a lot of Ichimoku tutorials out there that disregard it, like, oh, we don't need to use it. Yeah, you do. It is there for a reason, and it is absolutely stupid that a lot of people do not utilize it. But the lagging span, it's also called the Chico span. It is the current price action. So again, if I just remove all of this here, oops. It is the current price action, but it's moved back 26 periods. So you can see this better if I use a line. So if I use a line chart instead of candlesticks, you can see that it's just that's all the lagging span is the current price action. It's just the current price action is made a line 26 periods back. All right. And so those are all the components of the Ichimoku system. But now we need to know, well, how do we trade this? What is the point of all of these things? How do we trade it? I actually like to call it a lagging span black. Easier to see for me, at least. Oh, you know what I forgot to do? I forgot to put the cloud. Well, there are rules that we need to follow, because the most important part of the Ichimoku system is not where you are taking trades. It's telling you when not to trade, okay? If you're familiar with Bollinger Bands and you know about the squeeze, you know when the upper and the lower bands start to constrict, that's called, it's forming a squeeze, it's entering consolidation. Before John Bollinger even came up with that, we've known about this. This Japanese had this in the Ichimoku system. Whenever price is inside the cloud, we do not take a trade. We do not trade when we are inside the cloud. All right, that is telling us that there is no clear direction, that we're in an area of consolidation. We don't take trades in the cloud. It's very easy. Whatever time frame you're trading on, if you see prices inside the cloud, don't trade it. Very easy. But let's say we're inside the cloud. Let's move back here. Let's go to like a 4-hour chart. Oh no, we can go down here. But let's say we're inside the cloud here, floating around, you know, above and below it. I want to see a better one. Sometimes the dailies are too, on some instruments, use the 4-hour. Trying to find a good example to use. Well, we'll use this one here. All right, so we're inside the cloud right here on the 4-hour chart. Maybe actually 1 hour. Yeah, it's a little better. We'll do this. This is a good example. So we're inside the cloud. We don't take a trade. But when do we take a trade? If we're going to take a long trade, if we're going to go long, the rules are very simple. First rule, price must close above the cloud. Second, the cloud ahead must be bullish or green. Third is that the conversion line must be greater than the baseline. And fourth is that the lagging span is greater or crosses above the cloud. Okay, so those are our rules for going long. Rules for going long. Price must be above the cloud. The cloud ahead must be green or bullish. The conversion line must be greater than the baseline, and the lagging span is greater or it crosses above the cloud. All right, and so this is what I mean. If we do a market replay, and I put our price action here, and this brings us back in time, and so we can replay past price action. I really encourage everybody to do this. Find a chart you don't trade that you're not familiar with. Try your best not to look ahead in the future. Do a market replay, and then kind of mock trade it how you would if it was live. So here we're in the cloud. We're not taking a trade. There's no clear trade because we're inside the cloud. But if I pause this, I have a condition met now to be looking. There's a signal that's saying, okay, we may have a change happening. We're either entering consolidation, or we could see a change in the trend where we could get a breakout for a long trade. And what was that? That was when the conversion line crossed above the baseline. That's called they also call that a TK cross, because the conversion line is also the Tenkan-sen, and the baseline is the Kijun-sen, and so they call this a TK cross. So that's cross. That tells us that there may be a change happening soon. So price is still moving, and I see price it moved up, but it didn't close above the cloud. We're still inside the cloud. It got to the top there, but it didn't close above. Now right there, we did close above the cloud. All right, we have three conditions met. Three conditions met for taking a long trade. The cloud ahead is green. The conversion line is above the baseline. Price closed above the cloud. What one is missing? The lagging span is not above the cloud yet. Once the lagging span goes above the cloud, then we can take the trade. And that is the power of the lagging span with the Ichimoku system, because we're showing that the current price action is moving beyond past future projected prices based on a series of average of averages. That sounds really confusing. Just know that when the lagging span finally moves outside of the cloud, that is usually the final trigger that tells you we're good to go. And that's the thing that most Ichimoku trading systems, for whatever reason, choose to disregard. A lot of Ichimoku trading systems tell you just, okay, whenever you close above or below the cloud, you just take a trade, and that is a very dangerous way to trade. Don't do that. Now I hit play, so I'm waiting for a close. Right now I would enter. So you'd enter a trade right there, and we can observe. Well, we know what happens already because we watched this play out. And we can speed this up a little bit. And notice as we're moving, when price comes down, where is it finding some support? It's usually finding support right on the conversion line, correct? That's a sign of a strong trend. When you see prices move out of the cloud and then they come back to the conversion line, generally the first one or two tests of that conversion line is enough of a signal that we're going to have a strong trend for a little while. Certainly when we start to cross below, though, when we start to cross below the conversion line and hold below it and we can't find support at the baseline, that is telling us that the trend is weakening. And sometimes some people say that the area that you take profit is when there's another TK cross, when the Tenkan-sen crosses below the Kijun-sen, or the conversion line crosses below the baseline. And that is where you would take profit. Okay? And so we're really watching this play out. And another area for taking profit would be when the lagging span is no longer above price and it starts to come back in. And actually, I just missed something, is that if we enter into situations like we just saw here, that's not what I wanted. See where price crossed below, and then we start to see a little bit of consolidation here as we're approaching the cloud. People often ask, well, when do I take a trade? Well, if you see situations like this where price is trading above and below the conversion and baselines, and the conversion and baseline are even sitting on top of each other, whenever the lagging span is trading inside price, that is an early warning sign that trends are going to change. But if the lagging span breaks out above price again, that's when you start taking a long trade again. All right. Now, what we want to do next is we want to identify a short trade. And so how do we trade a short signal? And we can do that back. I'm going to drag that along with me. We could use this. Okay, so that was our long trade rules. Our short trade rules are going to be just the inverse of this. So short trade rules. First is that price must close below the cloud. The cloud ahead must be bearish or red. Conversion line is below the baseline. And 4 is the lagging span is below or crosses below the cloud. All right. Oops. Get rid of you. Okay, so in this scenario, we won't do a market replay, but we can see that price is in the cloud, and then as price drops out of the cloud, well, you know what? The lagging span. Oh yeah, well the lagging span's already out. That was our signal. If we're trading inside the cloud here, we'd wait to get outside the cloud. And as long as the lagging span was outside and below the cloud, we're still good for that long trade. And this is just like taking the long. You know, you look at your price action and how it's traded. Notice that in strong trends, you're going to find a lot of support off the conversion line. You'll also find it on the baseline and on top of above the top of a cloud. The cloud itself actually acts as a strong support zone. And so if I'm looking right now, this is actually a pretty good example. We're live right now, and I'm looking at the dollar yen, and the dollar yen on the hourly just turned into a short opportunity. Okay, so this is the 7th of June at 6 p.m. Central Time, and taking a short here is probably going to be a pretty lucrative trade. Oh wait, you know what? I take that back. Is that okay? Sometimes you do want to see. Yeah. Okay. So is the cloud ahead red? Here's the short signals that we're looking for. Is the cloud ahead red? Yes. Is price below the cloud? Yes. Is the conversion line below the baseline? Yes. Is the lagging span below the cloud? Yes, it is. So this right here is a short trade. If we would have gone short when we first broke out, we would have experienced a lot of ping-ponging around and whipsaws. And why bother? Let other people figure out where this is going to go. We just need to get on the same train. And the final signal, the final trigger for going long or going short, depending which way we're going with the Ichimoku system, is this lagging span. The lagging span is the real kind of hidden trick of the Ichimoku system, is that when this guy finally crosses below or above the cloud, that is the final trigger that you need to move, because very, very rarely will you get a breakout of a cloud with the lagging span and then the market decides to turn the opposite direction. That could happen. But right now we have on the hourly all 4 conditions met for going short. All right. That is the Ichimoku system. I think this is most effective. The longer the time frame you go, the more effective the system is going to be. And that really goes with anything. I'll tell you that anything longer than a week, daily charts for the Ichimoku system are phenomenal. You get tremendous signals doing it this way. But I'll tell you that one little trick where you can violate the rules is on a weekly chart. Okay? On a weekly chart, often all you need in the Ichimoku system is just the lagging span and the cloud. Because things are not often very sporadic, and nor do they move, a crap ton like they do on shorter time frames. But signals on the Ichimoku system on weekly charts, often all you need is a break of the cloud and a close above or below with the lagging span moving above or below it as well. Okay? That is often all you need for signals on the weekly chart. And you should look at multiple time frames with the Ichimoku system. You can get phenomenal signals with the Ichimoku system by having multiple time frames. So if I'm looking at the hourly chart, I see that is a good signal. If I look at the 4-hour chart, what am I looking at? I'm looking at we're right on top of the cloud. Going to start drifting into it. If I look at it on the daily, we're still above the cloud, but we're entering in some weak areas. Why? Because maybe if I put why we're entering weak areas? Well, the conversion line crossed below the baseline. We didn't find support at the baseline. Lagging span is trading inside price. So that is telling me that we have weak conditions in the dollar-yen going ahead, and that we have a sell signal. So anyways, I hope I didn't go too long-winded with this. I hope that you found it helpful and useful, because we do use this during our trading sessions. This is kind of the basis for what we take a lot of trades off of, in addition to the Gann geometry that I do. But this system is very effective. It is proven to work. But if the Ichimoku system doesn't work for you, that's your fault. You're either not following it, or you're not following it, or you're over trading or over leveraging, or you're trading on too short of time frames. Hourly to daily Ichimoku system, that's the way to go. 1 hour, 4 hour, 8 hour charts, daily charts, that's the way to go. Trust the system. Trust the system. When I started using it, I still lost money on it because I didn't trust it. I still thought that even though I was losing money all the time, that I knew better than a tried and true method that's been around since World War II, prior to World War II. Obviously I know much more as a trader who's new and losing money. Obviously I know that this system doesn't work. Boggles my mind why I did that. And I know some of you have gone through that too, where you don't trust the system enough, where you think you know what is best, but really it's just your psychology and emotions getting you out of trades. So follow it like a machine, and it'll steer you into the direction of profitability and successful trading, and that'll set up a good stage for you in your trading career. Hope to see you all in the trading room here in the future. Whenever you're watching this, I hope we have been giving you some good trade advice, education, and ideas, and hope this finds you well, and we'll talk to you again. Bye-bye.